Okay, so this is Felicia Howard, Sales Manager with Elite Mortgage and support staff for Trans Global Lending. This video is going to review the initial loan submission process to get your loan into our central processing for submission to the lender, approval, and closing. So again, this is our form, and there are variations of that for TransGlobal, but you want to make sure that you just want to complete this in full when you have a new loan submission so that it's very clear on what your goal is for the loan. So if you look at the very top of the loan submission form, you're going to put your name as the loan officer, your best contact information, and your preferred email address. Then underneath that, you're going to list the applicant information, first name, last name of your borrower, as well as your co-borrower, if applicable. Borrower's email, note in parentheses, it says must have, and I touched on this in a previous training module about the importance of making sure that your client does have a working functional email address. And if they don't, you can assist them on any of the free websites to create them. Either Gmail, Yahoo, any one of those, Hotmail, because it's going to make their loan process a lot smoother if they have access to an email address. Some lenders do not like using the same email address for both clients. So if you do have a co-borrower, it's a safer bet to put a separate email address for that co-borrower. The thought process behind that is that when they're sending disclosures, they want to make sure that both borrowers have received those disclosures and reviewed them. If they're both going to one borrower's email address, then there's the possible issue that they are signing on behalf of the co-borrower, which is not what the lender wants to see. So as much as possible, get a separate email address for the co-borrower as well. For the subject property, you're just going to list your street address. And this is for the home that they're either purchasing or refinancing, not where they currently live. So that's the subject property. And then you just want to let us know what kind of a loan you're looking for. Is it going to be a conventional, FHA, USDA, VA, or other? Other would be like a hard money or a jumbo. Fixed rate, 30, 20, 15, 10, other. ARM and IO, which is interest only. So you would choose that. Let us know what type of transaction we're doing. Is it a purchase, a rate and term refinance, cash out? Property type, single family, PUD is a planned unit development, 2, 3 units or other. Occupancy, is this a primary home, a second home, or an investment property? I'm going to touch on this really quickly just in this video just to clarify the difference between those, because a lot of times new loan officers get a little fuzzy on the difference between a second home and an investment property. So the way that lenders typically look at that is your primary home is where you plan on living, right? It will be an owner-occupied residence. A second home is considered a vacation property, which means that you can't just choose a second home across town, right, in the same city that you live in, right? If you're going to choose a second home, it has to be considered a destination and or resort or vacation location, which means if you live in Sacramento, California, and you choose to purchase a home in South Lake Tahoe, a condo up there, that would be considered a second home or vacation. Or if you purchase a home, say, on a lake somewhere, even if it's within, I would say, 50 miles of where you live, but if it's a camping ground, lake destination, summer spot, then that would be considered a second home. An investment property, you could have an investment property right next door to your primary home within the same city. Doesn't make a difference. You plan on using that for income generation, rental income. So it doesn't matter where you purchase that property. The difference obviously is going to be with regard to interest rate. Your interest rate will be a little bit higher on your second home, but a little bit higher than that on your investment property. So sometimes people try to use, say that their rental is going to be their new primary, and there are rules regarding that. So if you have any questions about what type home your borrower is looking to purchase and what you should classify that as, reach out to processing, reach out to me before you start quoting anything to your client, just to confirm with us as a new loan officer that you're giving them accurate information on how the lender is going to view that property. All right, moving on, you're looking at second mortgage. You want to let us know whether there is a second mortgage on the home that does need to be paid off or subordinated. A subordination means that you are asking the second lien holder to stay in second position and not be paid off in the refinance transaction. So say you have a first and a second loan and you just want to refinance the first mortgage, you do not want to pay off that second mortgage, then you do want to request a subordination. They are not always approved, and there is a fee associated with that with almost all the lenders to review a subordination request. So you want to look at that and find out the guidelines ahead of time before you proceed with that. Impounds. Impounds are for your property taxes and your homeowner's insurance, and it's going to let you know whether you would like to have the taxes and insurance impounded or included in your mortgage payment. If that is the case, you would hit yes right here. If they would like to pay the property taxes and insurance on their own, you would hit no. Again, there are some loan products where it is not optional. So if you have any questions on whether you can waive impounds or not, reach out to processing or management. Then you want to look at your interest rate. Let us know what rate you're shooting for. And then with regard to your closing cost scenario, you want zero cash to close. You would like to roll in the closing costs, borrower to pay the prepaids and the closing costs, right? So you just want to let us know how you want to structure your closing costs. And then whether you're doing a borrower paid or a lender paid transaction, which I touched on that in a previous module. Borrower paid means that we are charging our commission, our broker fee, which for TransGlobal is 1.5%. You're charging that 1.5% upfront to your client. A lender paid means you are not going to charge that upfront to your client and that the lender will pay us on the back end. If there is any origination that you're charging, be it any point buy down or origination fee, you would list that here. And then YSP is your yield spread premium or your rebate. We were talking about that in the Loan Sifter module about any lender credits in green are going to go towards paying any type of third-party closing costs for your client. If you are expecting a lender credit rebate, then you're going to list that here. Over here, we have your credit credentials, your username and login for your credit. And sometimes we ask for that because if we need to reissue credit and we don't have access to your report, we need your username and login in order to do that so that we don't have to pull a separate report when we upload to the lender's website. You also want to let us know if you already locked your loan. This is a very important point that I really want to stress. It is a loan officer's duty to lock all of your loans. It is not the responsibility of processing to price, lock, or sell that rate to your clients. Okay, so please make sure that you are having that conversation with your clients. You are locking your own loans because then if there are any questions about what it was locked at, we don't want to have that falling on processing who didn't have that conversation with your client up front. If you did lock it, then you want to let us know the date that rate is set to expire. And then you want to choose standard or full service processing. Standard processing, there's no additional fee for. Full service processing is a $295 charge out of your commission for extra services that you would do to help save time for the loan officer. Processing will do additional duties for you to help move that file along. So if you have any questions about that, please reach out to processing if you need full service processing. At the bottom, you're going to type in what lender that you'd like to go with. And sometimes it's good to put a second choice as well here in case the first lender we're not able to go with, we can have a backup. What type of program you're doing, if there's a specific code. Sometimes there's a specific code associated with the loan that you're doing, and you want to go ahead and give that. Sometimes it's a combination of various letters or numbers, and you'd want to go ahead and put that in there. Title and escrow. This is a point too. Your borrowers do have a choice on who they choose for their title company. Oftentimes we have a relationship with several different title companies, so we end up defaulting, but it is a borrower's choice to choose. So you do want to ask them if they have a preference for title. If they say they do not, then you can go ahead and open it with whomever you like. List the title company, the escrow officer's name, the escrow officer's phone number, and email address. On the additional notes, it's anything that we need to know about the loan. If there was a BK, a foreclosure, loan modification, if the borrower has employment issues that we need to be aware of. And if you need to put that on a separate note or in an email, please do so. You can just say see email and you can give us the details in the email. The more information you give us up front about any roadblocks that are going to come up with the loan, the easier that we can get around those up front. A lot of things that pop up that we don't know is whether the borrower is truly self-employed. They may have provided you W-2s, but they may have an ownership interest in the business that they work for. That can cause a problem. Sometimes the borrower doesn't have a full 2-year history on the job. That can cause a problem. So you just want to ask probing questions to your client so that we can get a full idea of what we're dealing with. Most scenarios we can get around, but we just need to know up front what they are. Okay, so this is your initial loan submission. Then I am going to show you the intro packet. So this is a packet of documents that you can shoot over to your borrower and have them complete. This is your loan application, so they can fill the majority of that out. For me personally, I do not have my borrowers fill out a 1003. I just ask them for the initial documents. I can gather most of the information that I need for the application from the documents they send me, be it their tax returns, W-2s, pay stubs, driver's license, and bank statements. But if there are any holes in that, then I just call them or email them just to fill in the holes. Sometimes this application can look a little daunting. They may not understand exactly where to put information. So I usually do not send my borrowers a 1003 application to fill out, and I just ask them for their income docs, call them, and fill in any information that I didn't get from the docs after. So that's your application. Then here are the documents that you need. Now this is for a purchase. So you want a copy of a driver's license. It's very important that you get a color copy of the driver's license. And it's not listed here, but you definitely want to get a color copy. I tell my clients that they can take a photo with their phone and email or text it over, but you want to get a clear color copy of driver's license as well as a clear color copy of their social security card. If they are not residents, you want to get a copy of a green card, visa, or proof of legal residence. You want to get 1 month of paycheck stubs if they are W-2'd. So if your borrower, say in California, works for the state, a lot of state employees get paid once a month. If that's the case, you actually will need to get 60 days of pay stubs. You'll need 2 full pay stubs covering 2 full months if they're paid once a month. If they're paid weekly or bi-weekly, you can just get a 30-day history and you'll be fine. You'll need 2 years of W-2s. The most recent 2 years, so we're in 2017, we would be asking for the 2015 and the 2016 W-2s at this point. A borrower has to have the last 2 years' tax returns filed in order to get a loan. So that's a very important point. Make sure that your clients have filed their taxes. Sometimes they will provide you with a tax return and you just assume that they filed it, but what the lender will do is there's a form called a 4506T, which is a request for tax return transcripts from the IRS directly. And the lender will send that form to the IRS to confirm that you actually did file and the numbers match the tax return that you provided. So double check with your clients, do you have any unfiled tax returns? And if the answer is yes, you need to get those taken care of before you're able to move forward with the loan. Currently, we are asking for 2015 and 2016 federal tax returns. We do not need state tax returns, okay? Federal only. Sometimes people just lump them together, and that's fine if they send it, but you only really need to send the lender the federal tax returns. Beyond that, we need 2 months bank statements, all checking savings accounts. That's full bank statements, not transaction records. So it's very important that you get 2 months bank statements, which is the monthly statement that the bank will provide, and almost all banks will have that available online that the borrowers can log in and download and email it to you neatly in a PDF version versus printing it out and faxing it or anything like that. Okay, please make sure to tell your clients that they should not alter that bank statement. When I mean alter it, I mean do not cross off any portion of account numbers. Don't cross off any transactions that are on the bank statement. Leave it completely clean so that the lender will not kick it back and ask you for another copy. On a purchase, we are looking for a homeowner's insurance policy, the name of an agent and a phone number so that we can reach out to them and bind a policy and get the loss payee for our lender on there on a purchase. Okay. The other items on here are more for a refinance transaction, but I'll just touch on them. So if you're looking to refinance, you need to ask for the most recent mortgage statement. If you're doing a streamline, like an FHA loan, you're going to ask for the original mortgage note, which is a document in their closing package. If your borrower does not have a copy of the note, we can easily get that from their current lender if we have a signed borrower's authorization. You want to get the property tax bill. You don't have to get this always from the borrower. You can get that off of the website in almost most instances, and you can also get it from the title company. If they have any rental property, you want to get a current rental agreement, also called a lease agreement. If there are any HOA dues, you want to get a most recent statement on what the amount of HOA is. And then sometimes on a purchase, if they're renting, you'll get the landlord information. Sometimes they will request what they call a verification of rent from the landlord. If the landlord is an entity, meaning it's like a property management company, we can just get a printout from them. If it's an actual homeowner, an individual who's not using a property management company, then typically they will ask for 12 months of canceled checks from the client showing that they made the rent payment on time. Okay, beyond that, you want to get a borrower's certification and authorization. This will say TransGlobal Lending on it for those that work for TransGlobal. For those that work for Elite, it will say Elite Mortgage or ERS Nationwide. And then you can just go ahead and have your borrower wet sign this. When I say a wet signature, that means they have to physically sign that with a pen. It does not need to be the original copy sent to us, but you cannot e-sign it. So they need to actually physically sign that, and then they can scan or email that back to you. The credit card authorization is going to be a form that we use not only for the credit report fee up here, but also for the appraisal. So if we are going to use this card for multiple charges throughout the transaction, they need to initial down here in this section and fill out their full credit card number, the expiration date, and the 3-digit code that's on the back. Okay. This just goes over the standard loan approval process. Take the application, order documentation. We wait for the documentation to come back in. We submit the loan to underwriting. We wait for loan approval. The documents are drawn. We fund and we record. I do want to make a point in this section right here that with the inception of TRID, which is the TILA-RESPA integrated disclosure, we have a loan estimate. We are not able to order an appraisal until the borrower has signed the loan estimate. And most of the lenders that we work with will do the loan estimate for us. So when you submit the loan to processing, processing will then upload to the lender's website. The lender will then send an email out to the client with the loan estimate, which shows all the charges and potential charges associated with this transaction. Once the borrower e-signs that, then you are able to move forward with charging and ordering an appraisal. If you need an appraisal ordered prior to the loan estimate being generated, then the broker or the loan officer or real estate agent would need to pay for that appraisal up front. Okay? This is really important. It is very key that you go over this with your clients up front, that they do not change jobs, switch banks, or move money around. This is a key thing. If moving money around, if they start making a lot of transfers, it creates a big headache for you trying to source deposits and things of that nature. So you definitely want to tell your borrowers, once they start this transaction, don't do anything with regard to depositing large sums of cash or moving things around in their bank accounts without talking to you about that first. Tell them, do not stop making mortgage payments or rental payments. Make everything on time. Do not make any major purchases. This is a huge thing with regard to purchase transactions. People, when they're buying a new home, they want to start buying new furniture, new appliances. You want to make sure that you explain to your clients that they do not want to make those type of purchases until their loan is closed. And the reason for that is that A, it can increase their debt to income ratios by having new payments for furniture, and it can also lower their credit scores. The lender often will do what they call a soft credit check within 10 days of closing, and if the score has dropped, they may become ineligible for the loan and it will kill your whole deal. Do not co-sign for any new credit accounts. Don't transfer gift funds without a consultation with your loan officer beforehand. Do not make travel arrangements. This is huge. People, I'm finding, especially in the summertime, are making travel arrangements while they're in escrow. That causes a problem because we can't always pinpoint down the exact date that they're going to close. And so you want to make sure that your borrowers are available so that we can close on time. Oftentimes, you cannot assign a power of attorney at the end of the transaction. You would have had to get that approved up front. So just keep that in mind and tell your borrowers to let you know if they do have plans to travel, but to try to avoid that until they close their escrow. Do not make any offers on any dilapidated property, like renovation loans, etc. Do not undergo any major renovations in the home. Like if they were planning on putting in new bathrooms on a refinance and they started doing the work on that, you want to make sure that they don't do that until the appraisal is complete, because then the appraiser will call that out and they will have to fix it before they can close. And if they were hoping to use money from the cash out of a refinance to do home improvements, they won't get that money if they've already started it. So again, top 10 credit don'ts during the loan process. Don't do anything that will cause a red flag to be raised by the scoring system. Don't apply for new credit of any kind. Don't pay off collections or charge-offs unless your loan officer advises you. Do not max out or overcharge your credit card accounts. Don't consolidate your debt. Don't close credit card accounts. Don't pay late. Don't allow any accounts to run past due even one day. Don't dispute anything on your credit report, and don't lose contact with your mortgage or real estate professional. You definitely want to stress to your clients that it's very important to keep the lines of communication open via text, via email, or phone calls, whatever the client is most comfortable using. That's how you want to keep those lines of communication open. Impound disclosure just lets us know whether they would like to have taxes and insurance included or not. Again, I mentioned earlier that some loans require it, such as FHA loans. You don't have an option not to have taxes and insurance included, but there are other loan programs where you can waive it. And this is the borrower YSP disclosure. So if the borrower is taking a lender credit, and we are giving them lender credit to pay their third-party closing costs, we want them to keep that loan for a minimum of 180 days. So if the borrower plans on paying their loan off before they make 6 payments on that loan, you definitely want to talk to them about that, because some of that yield spread premium could then come due. And so you just want to make sure that you don't run into an issue with that. So if they plan on keeping the loan for a short time or refinancing it again quickly, make sure they have a conversation with you, and you can talk with us, your processing team or management, about what options and steps you should take with pricing in order to avoid any chargeback later. Okay, so that's basically it. That's the whole loan submission process. I do want to stress that, obviously processing is trying to be timely with all of your files, but obviously we do have several loan officers that we work with, so there are posted turn times. Typically, when you submit a loan, we will review and get to that within 24 to 48 hours. Also be aware of lender turn times. Depending on how busy it is and what season it is, turn times can be slower. If you need something done quickly, reach out to us so that we can advise which lender that we think would get it done the fastest for you. Sometimes the lender with the best pricing is not always the quickest because a lot of people are using them, which will slow down turn times. So just understand that and keep the communication open so that you can have a smooth close of escrow. Again, if you have any questions, you can reach me directly at 916-705-4038 or at Felicia, FELLICIA .Howard, HOWARD at EliteMortgage-CA.com. Thank you so much.